Good. Now I'm recording it. So our main goal of trading at all is to make money. And the number one rule when it comes to Forex trading is for you to protect your capital. So if you can fight, if you can protect your capital, you will live to fight another day. And there is always opportunities in the market. The market is open 24/5. So which means it's open 24 hours for 5 days. That's when the Forex market is open. So for those 5 good days, you have opportunities in the whole 24 hours. So risk management and account management, that is the main part of the discipline you need. Let me put this into 15 minutes so I can go over what I was talking about earlier. So like I said, if, for example, you do not see this part of the charts, right? You don't see those parts and you have been marking your chart for a while and all you see is this drop to this point. I don't know if you heard the part in the other video where I said this particular swing high to swing low was a movement that I entirely captured. And that's because I'd marked my charts. You can see it's about the same supports. That is what I was looking at. I'd wanted a buy. You can see my buy bias. When it got to this resistance here, I knew we're gonna drop. Not that I'm always right, but if I'm wrong 5 times, I hope that the one time I'm right would outweigh what the wrong has been, and that's why we need to manage our accounts. So if, like I said, we're around the support, I see this huge bounce. It correlates to this point right here, and I see all this reaction here. I know that something is about to happen. This whole area right here, this whole place, I know that something is about to happen. So what could happen is this, is either we break the support that I had here, this support right here, is either we break it, and if we're breaking the support means that, let me pull back the support line here. Okay, take the magnet off. But bro, did you get the way I set up the trading view a little bit? Was that a little bit explanatory?
Yeah, that was concise, yeah.
Okay, all right, good. So this is gonna be the support. I see all of these reactions, so I'm hoping for a buy. I'm hoping to buy back up. If I'm going to buy back up, what it means is this. It means that the US dollar is about to be weak. And when the US dollar is weak, I'm expecting the euro to gain strength. I'm expecting a significant, I want the US dollar to be weaker than euro, basically, because I want to buy up. So in the buy up, is going to look somewhat like this. Remember, like I said, we don't know what has happened in the future. We are just about to get into our trade. So my buy up will look somewhere like this, because in the last class we had, I talked about Fibonacci, and I'll cover it again, if not today, in subsequent class. 0.618 is where my resistance is going to be. I like that point because in my 15 minutes chart, I'm on 15 minutes charts right now, and this is where you change the time frame. You can also change it by just typing on the thing. For example, if you want 1 hour chart, you can just type 60 on your screen, and it will change it to 1 hour. You see, my chart layout is a little bit different now, but no.
Where did you type that? You just type it you just type it from on your keyboard?
Yeah, I just type it on my keyboard. I just go 60, boom. I go 120, 2 hours, boom. So just to change my overview, to change what I see. But we're on 15 minutes chart, which is what I'm using for this particular explanation. So now we have our support, our resistance here. We already got our support. This support you would have marked, because if you're trying to get this swing from up here, if this swing from up here to down here is what you're trying to get. Let me make this particular one solid. Let me make that solid. Okay, good. So if you caught this swing low, high to swing low, already you should have made yourself some money. But no, we want to ride up some more. You can see this is a good area of resistance right here, because you see what happened here. It fell. We can see here there's a reaction here. That's a good support. It bounced. It didn't break this. It bounced back up. But when it broke this line here, you saw it dipped out to a new support. So we're expecting that what's going to happen now, price will come and test this. Why? Because one, we have a resistance there. It look like a key level on a small time frame, and there's a 0.618 Fibonacci, which is what I kind of explained last week, if we remember. So from this point, I see that bounce up. I will take some things off the screen so that you can see more. So my buy will look somewhat like this, guys. So I'm going to pick the long. Boom. So I'm buying from here, and my target will be just below here, and my stop loss will be a few pips below my support. So what then is stop loss? Stop loss is if your trade is going to go bad, you want this thing to take you out of the market, close your trade, boom, and take your loss like a big boy. Or if this thing is going to go in your favor, when it gets to your take profit at some point, which is where you've marked, it should give you your profit and close your trade. You don't want to be in the trade forever. Even if you're a long-term trader, you don't want to be in the trade forever. Like I said, there's going to be opportunities 5 days in a week for 24 hours. So get your stuff and go. Protect your capital and make your money. Even if it's a few pips, like I went over pips the other day, even if it's a few pips you caught, take your pips and go. So now, let's say you're buying from this point to this point. How much is that? This is 1.1792, and you're trying to buy to 1.1832. So you have in your hands some good 40 pips. 40 pips. Let's do text. We're going to go over to 40 pips right now. So let me input some things in my text. Let me input some things in my text real quick. All right. So 40 pips is our target, right? 40 pips profit targets. Profit targets. We're using about how many pips stop loss? This is 79292 minus 77. That's some good 18 pips. 18 pips stop. So what you're saying is this: you are around a 1 to 2 point something risk to reward ratio, which is not bad. And if 40 pips, if this trade goes in your profit and you're using a lot size, the smallest, which is 0.01, which means 10 cents for every pip. Okay, so if you capture 40 pips at 0.01 lot size, 0.01 lot size, you would have made yourself a good $4 in that space of time. However, pips go from 0.01 to 1.0, which is the standard lot size. And this is what used to be the minimum, which is why so many people couldn't get into the market before. It used to be 1.0 lot size, which meant, which still means rather, $10 for every pip. However, you can do 30.0 lot size. You can do 100.0 if you want. You can do whatever your broker would allow you. You can do 100.0, which would mean that you're saying you want, what is 10 times, you're talking about $1,000 for every pip movement in the market. $1,000 for every pip movement in the market. So if you move 40 as it is right now, you will bag yourself $40,000 for the pips. So that is how people who have different sizes of accounts make different money and the different ways you trade. But this is a really good conservative way of trading. 20 pips stop loss, 40 pips profit, 2-to-1 reward to risk ratio. That is brilliant, absolutely. So let's play this and see if we're actually going to win this trade. And I picked this at random. I just used my own trading style to see what it's going to be like. So let's play this and see what happens. Boom, 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 boom. You can see we've won this trade and it's made a reaction back. You can see where it made that reaction back to, around that my zone. So if it does make this thing a support, which is what we're hoping, if it makes this a support, this is what's going to happen. Then for the coming week, we would have somewhat like this continuing, because that's broke our 0.618. Of course, we're still going to mark it, but that is how you set your risk to reward. That is how you set your take profit and stop loss. Take profit at the top here, stop loss here, and you can see this rally. Boom! This happens several times in a day on different time frames on different pairs. Okay, so next thing, just give me 1 second, guys.
Okay.
Wait, I don't know why you left your phone. I just needed it for that. I'm just bringing it back. I feel like you feel somehow without your phone. All right, so let's get on, man. Okay, so that has been covered. Let's get to the important part. So I've done a bit of take profit, stop loss, risk management. So for risk management, the main thing is this: never at any point in time trade more than 5 to 10% of your account size. If your account size is $100, don't risk more than $10 at a time for the total trades that you're in, except if you're a little bit advanced. But
Okay.
if you just get it into it, just so that if your trades get bad, let's say, for example, you're going at a risk to reward 3-1, right? So you do 10%, you lose about a fraction of your money, say $10 at 10%. You do the second trade, you lose again, $10 at 10%. You have $80. You get into your third trade, and you make your reward 3-1 ratio. But because you're using that 10-1, you would have covered your loss and then a profit. And say, for example, you're going at a good rally, you make like 5, 6, 7, 8 consistent wins. You would have covered so much than when you're risking a huge percentage of your account. Say, for example, you maxed out your leverage and you are using on the $100 account, you're trying to risk about $60. So let's say for that, you're trying to use a 0.05 lot size, which is going to be like 50 cents for every peep. If this thing is going to go against you to chop the bulk of your $100, and when that happens, it means that tomorrow you not go fit, you won't be able to trade at the level which you would have traded yesterday. So the main thing is protect your capital, risk, use correct risk and account management discipline. So now let us mark this chart actually. Are you ready, bro?
Yeah.
Okay. So with this, I'm going to, okay, before we mark the charts, okay, I want to go over indicators because I think that's the last part, then I will go to trading plan. So indicators that I use. What are indicators? Let me clear all of this back because we're still going to get back to it. So what indicators do you use, Ife? One, I use the pivots, high, low. This is where you can find all the indicators. So these are my favorite indicators here on TradingView. For you to add yours, you want to go to FX, click on it. These are my favorites, but you type in the one you want and it's going to bring it out. Someone asked me last week if I do use MACD and moving averages and pivots. I use them at different points in time, but all these are my favorites, and I'll show you how they all come into play. So the first one is pivot high low. Very important for me because of the way I trade. I trade on support level and resistance level, and then I use Fibonacci to get that. But to know all those levels and see if it's...
In fact, you keep mentioning this term Fibonacci. What's that all about?
All right, so Fibonacci to me is very important, and it's very important to almost every good trader that I know, right? And what it is this. Ideally, if you had gone to the previous the charts, it's Fibonacci goes beyond trading. Fibonacci is like a ratio, like I was saying to someone last week, like this popular drawing guy, is it Picasso or something? He uses Fibonacci to position his images. A lot of people who are into painting as well, they use that to position their images. What it is the length of, say for example, our arm. Okay, our arm, the tip of the hand to the elbow, and from the elbow to the other to the shoulder, there's a ratio. One part is longer than the other, right? The same goes with our leg. The same goes with our wrist. The same goes with several other parts of the body. And actually, it's believed that the Milky Way itself is in a spiral circle like the Fibonacci. So if you just Google Fibonacci ratio at your time, bro, it's going to bring out several life facts that are being governed by Fibonacci. So it's been generally believed that if you drop a ball at a particular force, the same force, nothing else exerted into it, no external force, nothing. Of course, from top, it's going to come down, right? Mm-hmm. If it comes down, it will bounce. There'll be an impulse. So if there's a bounce like that, we expect that the ratio of that bounce back up. So let's say we drop a ball. Let's say we're at this point, we drop a ball to this place, mm-hmm. right? We're saying that when this ball will bounce back up, it should bounce back up to a particular place. It won't bounce. There's no way to bounce back up to where it's coming from. Except somebody is pushing it back up there. Then now there's some extra force. But we know that by nature, it will bounce back up, even if it's just a tiny bit, depending on what you're dropping. But it's expected that at a particular force, it should drop back to a ratio. That ratio is usually called Fibonacci. It's in science, it's in physics, it's in maths, it's in nature. So a little bit of Google, not even a little bit, a simple Fibonacci on Google will bring out so much, but it's very, very, very important in trading. Why it's important is this. I'm saying that if I'm in a downtrend, let's say this thing has been coming down from here, it reversed to here. So this is a downtrend, right? Very clearly. Right, bro? Mm-hmm. Okay. So we're saying that if this downtrend wants to continue, this thing should come somewhere. Where will it come to? Where do we want to take our profit targets? Where do we want to get out of this market? Fibonacci. So to know where it will be, bring out your Fibonacci from here, right? This swing up, swing high to swing low, we're expecting that based on Fibonacci, this thing we should have a good resistance here. So we're saying this thing will go from here to boom. That is what Fibonacci helps you do. It helps you to get a support level and a resistance level depending on what kind of trade you're getting into, if you're buying or you're selling. And that is exactly what happened. No. And that's exactly what happened in this case. In the case of this. So now I've gone over the take profit and stop loss, right? And I want to believe that after this, you would actually open a demo account so that I can, as the week goes by, I can give you guys some trades set up that we can just put in to see how my process works. Okay, so that would make me pick a support level. I see that there's a support level here. It's a resistance here. Good. My target would have been, hey, from this support at the bottom, let's buy this bad boy. Let's buy this bad boy to here, and I'll leave the market. I am good. I've caught those few pips. I'm good. But we can guess that from what had happened now, this thing has come to kind of retest. This thing has kind of come to retest this line as a new support. From this new support for next week, we'll be looking towards a buy. How far do we want to go? We'll see all of that. So let's mark this chart. Let's mark EURUSD. Are you ready? Okay. All right. So let's mark USD. Okay. So I've shown you my indicators, pivots. I have this SMA 50. What my SMA 50 does is this line. It tells me the momentum. It tells me the way it's moving, the moving average. So at this point, I see that the moving average is in a buy favor on a monthly time frame. That signals a good buy. If the dollar is weak this week, we know that we're going to write up some more. This green candles we're saying we're going to write up some more. But based on technical analysis, we can predict our own trade and leave the rest. We can go to Forex Factory to go see what's up in the news, or we can go to investing.com to see what's up in the news. But for now, let's mark EURUSD for the month. So I start with a monthly time frame. I have some candles that I use to guide my trading, but before then, I'm going to mark technical analysis strictly. So let's zoom completely in and see. This is the whole lifetime of the euro to the US dollar. It's gone up a little bit, and from this point that it went up, from this point here, it came up here, and you can see that from then it's been down. So generally, it's been coming down. It's been a downward movement. And why is that? Because relatively, the US dollar has been stronger than the euro for the space of time. Okay, so that's why we are in 1.18 relatively. So now the dollar is getting weak because of the whole pandemic. As it's getting weak, that's why we see all of this. Then at some point, the old Donald Trump started making the economy better. You can see from 2018 there about Donald Trump from all these parts. Donald Trump started making the economy better. It started going down. Then the pandemic hit. When the pandemic hit, the dollar was crashing. As it crashed, the euro was going up. And we can see this last month, we're in the new month, we have a reaction in this past 2 months when the economy started recovering. If the economy recovers, then we would have a further down movement, because it means that the dollar is going up and the euro is getting weaker. So if this economy is recovering now, from where it is now, we should start to see a drop. And that's why you see an indication of this thing not wanting to go up. So it's kind of stalling towards coming down. The US dollar seems to be gaining some significant strength, but that does not mean that the euro would not overcome it for the coming weeks. So that is the first thing I see. I see that we're in a downward trend. I see that it looks like we're close to a good support around here. And okay, now let's mark that. I bring out my trend line. I use trend line. I connect it to the last Fibonacci, to the last pivot high. This is my last pivot high. I connect that to the most recent pivot high, which is right here, okay? And as I connect that, what do I see? I see that my candles on the monthly has broken this. It has broken this trend line. That suggests to me that we're going higher up. It's broken this. It suggests to me that the US economy is still not in recovery just yet. We still have a bit of impulse towards the buy, but we see this red sign. But yeah, the second thing I would want to do is this, okay? The same trend line connected to the pivot low right here. We're trying to draw, these are just using trend lines, okay? So it connected to this other pivot low here. And we'll be saying something like this. We'll be saying, okay, if this trend line, this other trend line we've drawn, which seems to be a resistance, this white line here. Let me know if you guys are following me so far. I don't want to go too fast.
Yeah.
Okay, so what we're saying is, if this trend line here gets broken, this white line here gets broken, we're looking for price to break it and come and test this place as a support. That will be the new floor, because what happens is it will make it usually makes this, it touches it the first time, touches it the second time. There's a huge probability that the third time it touches it will have a good reaction. Is that it's going to break it and then come and retest it for a continuation, or it breaks it and then come back, breaks it down and touch here for a support. But in this case, we're still on a monthly time frame. That takes a long time to fulfill. But we already see this. We already see this, that, okay, cool. It's broken this immediate trend line on a monthly time frame. It looks like we are probably going to start seeing more recoveries. We're probably going to start going up because this trend line has been broken. However, you might want to test it. You might want to do something like this on a technical basis. You might want to do something like this. Test this trend line somewhere here and then boom, fly up. But we don't know. We have to just see. Okay. So yeah, from monthly, I take it down a little bit. I take it to the week. On the weekly, I want to see what's going on. So this is the whole week. I don't need all this part. I already know that this. Let me show you how the Fibonacci is important. I think I mentioned that the last week as well. Say, for example, you swing low to this point here, this point that we see. This is on a weekly chart, okay? And you did not see, all these parts. We didn't know what happened in all these parts here. Let's say you just see, yeah. So we didn't know what happened in all these parts. Take this thing off my charts, man. So we didn't see what happened in all these parts. Let me show you how Fibonacci is important. So I draw my Fibonacci from swing high to swing low here, and I'm expecting that this thing will bounce, will go up. because now I have a level here that seemed to be a support. I can reference it to somewhere in the past. Okay, I can reference it to this level in the past. I would have marked it, but I see that it is support, right? And I'm like, okay, cool. Let's analyze this area. I see all this consolidation. I'm like, okay, what's going on here? In the time frame, I have it broke this, came lower, which would have been a Fibonacci. If I analyze this as well, you see how Fibonacci came into play. And then it made a higher high compared to this, my last pivot. So I'm like, okay, it looks like we're in a buy. If we're in a buy, where are we going to? We're going to test this region here. We're coming to test this region here. So I put my support, my good resistance rather. So I put my resistance somewhere around there. And you can see there's some reaction. If you check this, my key points. If you check this, there's a lower here. You can see there's some reaction around this place. It touched there quite a few times. So I'm expecting that somehow my trade for this particular time frame is going to be towards 0.618. So let me bring out my long position. I get in a long position and I'm trying to go towards, let's bring it lower. You don't want to get exactly to there. You're not the one who created the market. You just want to take yours and go. So let's say we'll put it towards here and I have a stop loss towards here. I mean, that's about about 1 point, less than 2 to 1 risk to reward, but that's almost 2 to 1 risk to reward, which is brilliant considering where we entered from. Now I'm trying to show you how Fibonacci works. Let's play. We haven't seen what happened in the future, but we're trying to get in a trade, and we've got seen in a long trade because we see all this reaction around this point. We've seen this reaction around this point. We've seen that it made a higher high. So we know that, okay, this looks like a very beautiful buy for us. Let's buy this bad boy. So play, let's see what went on. It dipped. You're like, oh my God, I'm about to lose my money. Oh. And you can see all Fibonacci in play. Some big boys came into the market, they pushed it down, but the buyers, more traders trade this way. And the more traders trade in a certain way, the more we're going to see that it would happen, if that makes sense, because we are the ones who control the market. Buyers and sellers, we that are putting our money into the market are the ones who control it. So boom, 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 boom. Okay, I guess we would have lost the trade right there because of our stop loss. So stop loss would have triggered you. I would be like, oh boy, okay, we've made enough. But let's just see how far it's going to go up. Let's see how far it's going to go up. So two things can happen now. You've seen that it's made a new, so let me pause it right here. Let me pause it. Oh, I don't even want to show you that part. But I wanted to pause it right here. You see that it has made a new pivot high. So for some people, you can get out of the market here and be like, okay, this might be the highest point it's going to go. Well, of course, you can analyze and see if it's going further. But looking at this on its own, where did this thing get to? It touched this trend line. You can see that reaction on the trend line. When it touched this trend line, let me make this thing big so you see. Look at this particular candle. When it got to this trend line, you can see that reaction. It's towards your resistance already. So keep playing, let's see. But you can see we've already won this trade. Your take profit will boom, keep your money in your account. But let's see what ultimately happened. You saw the reaction around the trend line, and you see how important the trend line I drew from there is to the resistance. You can see all this at the point where our Fibonacci is 0.618. When you do that, take your profit and go. So let me play completely. You can see all the reaction around there. You can see all the reaction around there. You can see all the seller reaction around there. Right, guys?
Yep.
So that is how powerful Fibonacci can be. Fibonacci alone and trend line can make you money and can make you good money if you're practicing a good risk to reward. So let me delete this. Let's take it back to where it was. Do you want to exit to play mode? Yes. So, all right, we already won this trade. Boom. So when we won this trade, I already saw like, okay, good. So what is happening? This thing wants to come down. This thing is already at a resistance. When it's at the resistance, we're expecting that. So what had happened is this price had gone all the way. Price had gone up. We know that it's at a resistance. When it's at a resistance, what do you expect? We expect it to come down. How far down do we want it to come? Now, let me show you that. So how far down do we want it to come? The same Fibonacci that you asked me earlier, I bring it from my pivot low. Let's admit. So from my swing low to my swing high, okay, the same Fibonacci, like I said, I then check where's my 0.618, whether this thing is going to be a continuation of a sell or it's going to be a new reversal for a buy. We will see. You just want to take yours and go. Number one rule is to protect your capital. And of course, you don't want to marry no trade. So we draw our new support around 0.618. Remember, that's for this swing low to this swing high. So let's have our resistance, our new support rather, somewhere here. In this case, we did not see all these parts, right? We did not see all these parts. All we just see now is, oh, good, we made this money. Oh, good profit. So we're at a resistance. Not that it's going to always be right. Sometimes it's going to push below our resistance. But in that case, you're only going to lose a little money. So now we're like, oh, this is my resistance, this is my trend line. I see this reaction. Most likely this thing is about to fall from this point. Okay, cool. I want a sniper entry. Short position, boom. I'm selling now. I'm in a sell. Okay, so we're selling to where? We're selling to this, my golden ratio, 0.618. When you set up your trading view, your golden ratio might be a little bit, it might look, your Fibonacci might look a little bit different. It might be all sort of different colors. I set mine to be like this. And the way you can do it is this. Let me go to settings for this and you see what it looks like. So the style is this. You can see all the ratios. I took off all this. I took off all of this. So you might have all of this in yours, but this is all I use. I use 0, 0.382, 618, 1, half, 0.718, and 1.618. They all serve different uses and purpose for me. They all have different meanings. When prices are this range, I am looking for a continuation towards here. When price gets here, I'm good to close out my trade. I'm like, it's gone halfway. When price is around here, I'm looking, if price is going to extend, if it breaks my golden ratio, I'm looking towards a completion towards 1.61. So they all play different roles, and the more you trade, the better you get. But now this is our new trade. If you guys can see, this is our new trade here. We're looking to sell down to this 0.618. So let me take that off and play. So we'll see what eventually happened to this. Okay, we're playing now. We see boom, 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 boom. You're like, oh, what's going on? It confirmed, touch that trend line again. And oh boy, it's not going to get to my take profit. Will it get to my take profit? Will it get to my take profit? It's close to my take profit. Should I exit? Should I not? Okay, I see more red candles. Let me see what's happened to this red candle. And pause, boom. At this point, you can see it already touched here. It is a Fibonacci. If you know how to use Fibonacci, if you know how to, I talk about Fibonacci a lot. It's very essential to my trading plan. So if you know how to trade Fibonacci, if you know how to find key levels of support and resistance, and if you know how to use trend line, you might not need any indicator really. You might just get in for a long swing and then out. So like I said to you last week, I'm a swing trader. I swing. I scalp sometimes, but I mainly swing. I go for the big move and I close it out. So you see, on a risk to reward, you would have caught. You would have made this trade on a buy. You would have made this trade on a sell. And in that space of time, you've caught the entire trade. I trade EURUSD because it's stable. It's the most widely traded because US dollar is the base currency for, I don't know, almost 80% of the entire world population. Even our country, Nigeria, we still trade with the dollar. Most countries trade with the dollar, but aside the dollar is also
if I say that again, which is the most stable?
EURUSD.
Okay, all right.
EURUSD. It's got so many it's got so much volume. You know, it combines euro and the dollar. So there's a huge volume. Most traders trade this, so you can expect that you get some reaction. It's not as volatile as trading the British pound to the US dollar. The British pound to the US dollar is so much volatile. In 1 minute, this thing can move 50 pips, 80 pips, 100 pips, like crazy. But you can see this is quite stable. So now we've already caught this trade, right? With this swing low. Let me return it back to the way it was. Do you want to exit? Yes, sir. And you can see this support. These are our support acted like a really, really good support. Of course, it broke it a little bit, but you already out here because you have your take profits. Now you're watching all of this consolidation, like what's going on. But you can see this rally up. This rally up, it's got to this support, and it's like, okay, I'm balanced already. I'm no more going down. So for the coming weeks, we can check the US dollar, see that we're indeed recovering, and begin to buy up. But before we do that, this is where price is at as of Friday, yesterday, when the market closed at 4 o'clock, right? But let's now analyze this particular. We've already won this trade, right? It came up to here. We see it at our support. We analyze this area here. We see that it's ready. And I'm going to tell you how I know whether it's ready to buy or it's ready to sell, whether the movement is about to change or not. So we see all these reactions around here. And when we saw that reaction, we waited to see that, okay, what's going to happen? And we saw that it broke my, let me make this a bit smaller. Okay, that's where we saw the reaction really. So somewhere here, I'm going to take this magnet off. It's making my stuff a bit funny. All right. So we broke it. We saw all this reaction here, right? All this like, okay, what's going on? And for one, it broke this our purple zone here again for like after it had come down, it broke it here. It dipped down and then it broke it for the second time. When it broke it for the second time, it tested it as a new support. That suggests to me a buy. But no, let's see now, how far up do we want to buy? How far up do we want to buy? In this case, I'm going to bring out this Fibonacci that I'm always mentioning again. I'm going to bring out this Fibonacci again. So I didn't see all these parts. Either I didn't see all this part or we can go for this part because this is where it tested the purple zone again. But let's say from this part, I didn't see. But I've seen this my zone. I'm like, oh, for it to break it this time, it came down, it tested it. Okay, cool. Let's see. It looks like we're in for another good buy. It looks like we're about to buy, but we're going to wait for this purple zone to be broken before we buy. But how far up do we want to buy? Now, this is my arrow right here. So from this place, remember we caught this trade here. We won all of this. It came down here. And you're like, oh, okay, good. If it breaks, this is my purple zone. This might look like a sell, maybe wanting to come and test this place. But however, we're looking towards a buy. We know that there's going to be, if it comes down, it's going to come back up at some point. It won't be like that forever. So now it's come down. How far up is this thing going to go? Is it here? Will it touch here back? Will it go? We want to pick our own trade. This is what happens. Bring out your Fibonacci again. Again, it's a Fibonacci kind of trading style. And I would still teach us on a smaller time frame, some other things, but with time really, guys. So now you bring out your Fibonacci, and on the golden ratio, we're looking towards 0.618 again, right? Okay, let's make that our new temporary resistance. We're saying that, oh, if you're going to get into this trade, oh, guys, as long as this thing passes this purple zone for the third time, we analyze, we see all things being perfect, all things being normal, we checked it all. This is where we're trying to buy to. We're trying to buy towards here. Remember, we're on a weekly. I'm just trying to show you the power of this Fibonacci. So we're saying once we break this, my purple zone that I've drawn, we're trying to come here. Okay, so let me take this off and see what eventually happened to the market. So we're saying we're trying to buy to this zone. I want to make my risk to reward a little bit tighter. Okay, so once it breaks this zone, let's see. Let me play. Let's see what happens. Okay, it hasn't broken the zone. Our trade has not been activated. It hasn't broken it. But when it broke it, you can see it tested it back and boom, 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 boom. You see the reaction around that point, guys. This is where we are today as we speak. But you see how you would have cut just on Fibonacci, guys. You'd have cut this trade up, you'd have cut this trade down, and you would have made this most recent one that we are today. So from this point that we are now, two things can happen. Now you see this deep reaction. The deep reaction suggesting that, oh, okay, the US economy might be recovering like they've been saying for the past couple of weeks. It seems to have been recovering for the past one. Let's count the number of candles that are there. We have this one candle, this second candle, this third candle. So it looks like it's been recovering for the past 3 to 4 weeks, which of course we see in the news. We see all of that already, that it looks like the US economy is making a recovery. We see all these companies starting to go back up, Tesla halving, you know, all these people trying to be like, okay, we're recovering, let's make the money. As long as we're recovering, this is what will happen. It will obey this Fibonacci, and if it's going to obey this Fibonacci, it means that we're going to start coming down. So let me move this particular trade. This one, we won this one already. We won this one already. So my Fibonacci says that, oh, great, boy, we caught this trade, this whole move. So we caught this whole move, right? Okay, good. Now we're here. What happens next is what we want to check. Now, let me take it off. So if you want to go strictly by Fibonacci, you're not checking nothing. You just want to go by this. You just want to go off this. Let me put it in the daily charts so we can zoom a little bit in. So on the daily chart, what do we see? We see that this thing has not pivoted yet. We see that it's not pivoted yet. We can see that when it came down here, it made a lower low compared to this low. When it came down here, this low is lower than this. So if this covers, and you can see it closed above that purple, it suggests that the US economy that we thought is recovering might not be there yet. We might still want to push a little bit up from this zone. We might still want to push a little bit up from this zone. However, if we want to start coming down, how do we know? This is what we're going to do. And this is on a weekly chart. This is from that our swing low here, and this swing high back is what we're checking. This is what we're trying to analyze right now, what's going to happen next from this our swing low to this swing high here. Guys, let me be sure I'm recording this thing. I don't want the others that are not. Okay, yes, it's been recorded. So to this here is what we want to check what's going to happen. So let's bring out this Fibonacci again, the same Fibonacci that we're using, and we'll use that to pick our trade. So our trade will look something like this. From down here to up here. But because it hasn't pivoted yet, okay, we won't get right in. But once it breaks this purple zone back, we're looking for it to come and retest this purple zone here. So let me take this out by, let me move it. Let's move this. Let me move this. So we already won this particular trade. This next, what happens next is what we want to check. Okay, so let me take this off as well. I want to take this off. I want to take this off as well, so our chart is a little bit cleaner. So what happens next is what we want to check. So what I will be looking at is this now, guys. Because I am on a daily chart, it's a little bit more, I can see more into it. So back to this, my swing 560. So this is my swing low right here. I know this is my zone right here. I'm actually going to draw an horizontal line, 1.8355. That's the line I will be watching, 1.8355. Okay, so I will be saying something like when price, okay, so bring it back here as well. So if price doesn't go past this purple zone, that is our horizontal distance, if price cannot break it and make it a new support, if that's going to remain our resistance, what happens is this: price should start to fall next week. Next week we should see a dip from this line down here. We'll go into the smaller time frame to see where we're actually going to enter the trade, if this is going to be our trade. Is everyone still following me?
Yep.
And I hope I'm not going too fast. Please, if I am, just ask me questions and I'll just stop. Okay, so our trade for next week will be looking somewhat like this. I would get in a, let's close this, I think, but we made it. So let me take this off. Based on Fibonacci at all, if this does not get broken, this is what our trade will look like. Well, we cannot tell that just yet. What we can do now is this: we can actually draw a trend line. The trend line on a daily would make us see, okay, that's cool. If it breaks this, you can see this is my trend line. This trend line right here would be my key watch on a daily. So my trade will be like, if this is broken, if this white line is broken, let me make it dotted. Let me make it dotted. So if this white line is broken downwards, then I can start to sell. I'll be looking to sell. Firstly, to where? Where will I first sell to? We'll see that on a 4-hour time frame. But on a daily time frame, we are at a level. We're at a level already, and at this level that we are in, two things can happen. At a level, two things can happen. You're either buying or you're selling, depending on what is going on. But this is an opportunity. This presents to us an opportunity to go one way or the other. Just like this point presented an opportunity for us to buy, the other point presented an opportunity for us to sell. So the next thing we want to do is we're trying to sell down here because this is at a key level. However, that might be a key level to buy. So let's go to the smaller time frame to see what will be our decision. I'm in a sell bias right now. I was in a buy before, but I'm in a sell right now. So, but before we do that, we can check the candles. Let's see. Let's zoom in into these candles on a daily. Before then, let's zoom into these candles on a daily time frame. So this is my candle here. I can see that it's making higher high. Like I said, it's making higher high. It seems like it's going up. It seems like, okay, if it's going to go up, when it's going up, it means that the economy is, it means that the US dollar is getting weak. So in that case, let's put it in this other candle and see what's going on. So you see that it's kind of taking power from the sell, so which means it's about to turn over to buy. That is what this other candle says, this Fibonacci. Then my Renko as well. For the Renko, we can see that it's still bullish. You see this old Renko, it's so blue, it's still bullish, it's past this zone. So that suggests to me that even if I'm going to sell, I should wait for this zone to be broken before I come down. Okay, and of course we already have our trend line that is going to be an indication. So on this trend line, I want to put an alert on it. So I'll set an alert on this. So I'll be watching for it. Let me make my alerts go all the way to Sunday. Create. So whenever this my trend line, this is my alerts. This trend line, when it gets broken, whenever it gets broken, I'll first sell to this place and then sell downward eventually here, which is going to be our ultimate target. And so we already see that it looks so much like a buy, even though I'm in a sell bias. But how do we know which way we want to go? There are two ways we want to know which way we want to go. One, go check the smaller time frame. When you check the smaller time frame, you want to see what's going on in the smaller time frame. And the second way will be to go check the the US dollar index, the currency index. That is the comparing the US dollar to all other major major currencies. So if it is performing, if it's going up on that, this is the pair I'm talking about here. Let me show you real quick. This DXY. So if it's going up on DXY, it means that it's going to come down on the EURUSD. So that's one way I check. The second way I check is actually go to the smaller time frame and start to draw my trend lines there. So when I pick my trend line up here to this point here, I'll make that solid again because that's not where I'm watching. So I'll make that solid. So this point will be okay. It looks like we indeed are in a buy because this thing I touched here. But if it breaks here, we want it to break this two before we get in a sell. In a sell down to this place, which should be some good pips for us for the week. But yeah, let's go on. Let's go on first. Okay, let's go on. This is on a 4-hour time frame. So this is what we're checking. We're checking this whole area here. This area here is what we want to analyze now. Is it coming down? Is it coming up? And we seem to have 10 minutes to to reach a conclusion. So this area here is what I want to analyze right now. Is it coming down? Is it coming up? What happens from the zone that the price is at? How are we going to get our swing trade? Because we're not scalping. We're trying to get the major movement. So, okay, cool. It seems like it has tested the support here. It looks like it's about to buy. However, price might want to do something like this. Because if I bring my trend line here, it seems that it had completed a good up movement. It looks like it has completed a good up movement. It touched it the first time, second time, this third time, it didn't quite get there and it broke it. So what would happen is this. What I see for EURUSD for the week is this. Because it's in a buy, we will buy up towards here, bring out your Fibonacci. And you can see it didn't pivot here on a 4-hour. you can see there's no pivot. You see the pivot low point here, pivot low point here, pivot high point here, pivot up, but you didn't pivot low here. So which would suggest to me that, okay, this thing still has a little bit of down to come. It has not gotten to the pivot. However, if you put it in 1 hour, it might have pivoted already. So, but yeah, you see that I didn't pivot there, which might suggest a good down movement. However, this is going to be my trade here. My trade will be that, okay, if this thing is actually going to be a buy, I want to buy up here, okay? And from up here is where I want to see the reaction. From this zone here is where I want to see the reaction. So my trade will be that price would come here. Price would come here to this resistance. If it doesn't break that resistance, that will be where we're going to start our sell from. So we will start selling from here. If it breaks it, then it means that it's coming to test that zone there and then maybe come down. Do we get it so far? Right, so good. I'll put it in 1 hour. So that's what our trade will look like for the week. So it's looking like a buy. It hasn't made a pivot low to suggest to us that this is actually on a long term going to be a buy. But I believe that it's going to come here. So let's put it in, let's change it and see the other candle. On the other candle, we can see that it's bull, like it's dipped indeed, all red here, but you can see on the aching candle, like it's already showing the bullish momentum. So we'll see what happens on Sunday when the market opens. When the market opens, the US economy is still going to be sleeping. That's on a Sunday. So other pairs would have opened. The people in Australia, the people in Tokyo, they would have opened their session, and we'll see what happens up until 2 o'clock midnight, 2 a.m. on Monday morning. That's when the the Europe market is going to open. When the Europe market opens, we'll probably see a little bit of a push. Based on that, we'll then make our conclusion on what exactly this is going to be. But before then, we can go to 1 hour. We already see where we want to. If we're going to get in this, you can either buy up here or wait. My own bias is to wait. The waiting game is what I'll play. I'll wait for this zone so I can sell back down to come and test this my trend line here. But let me go to 1 hour. So on 1 hour, you can see what's going on in 1 hour. It looks like the US economy is getting stronger indeed. It looks like it just made a retrace. And once this line is broken, we'll continue our sell. That's what's happening in 1 hour. And so we want to see what goes on Sunday night, thereabout, before the London session opens, or just when the London session opens at 1. But this is our level here. If this is going to break, we're looking to come towards it first, or let me put it back in 4 hours so we see, or this is what we're trying to do. This thing has been making this bad uprise. So, or we're going from here to here. So we might be coming this week. If the US dollar is really doing what we think it's doing, then we might be coming all the way down here to 1.149, which would be a very beautiful place for us. So that means we're saying that we want to swing low to this point right here. Okay, so I hope it's not too clumsy, guys. Let me take off something so we can see a little bit of a clear chart. So this is how I mark my charts, really. I haven't put any indicator. Well, I've put 2 indicators, but I haven't used some other indicators that people use, like the MACD and all those things. But just off technical analysis, we can pick what we. So if you want to get in a buy, for example, this is what your buy will look like. Let me show you guys. So your buy from here will look like this. The buy from here will look like this. Just below. So if you lose this trade, what it means is you're going to lose just this point here. And if this breaks, you want to sell all the way down here. So if you lose, imagine you lose just this point and you get back in a sell. You get back in a sell from, okay, it's broken here, it's broken, these are trend line. Oh, good, it's touched here and it broke it. Say you start selling from here, okay, and we're selling all the way down here because we're trying to catch. What we're catching is the swing, and you make your stop loss around here. If this trade goes in your favor, not only would you have made times 3 times 4 of whatever you would have made here, but on a risk management level, on accounts management level, if you follow my 5 to 10% ratio, you'd only have lost about 5 to 10% of your capital here and made 3 to 4 of your 10% right here. Right. Let's see what we gonna do. So we have about three minutes left, guys, and I'm going to post this video. So for the week, this is what I'm looking at, guys. I am looking to wait a little bit. I can put it in 15 minutes and see some more stuff that happened so that I can really know where to get in. That is when I'm going to bring in some other stuffs that you guys have seen, something like my awesome oscillator. The awesome oscillator is kind of showing me that we have some buy. It's still looking like a buy. That's what this candle is. So from here to get a bigger green candle towards up. So it's looking like a buy, even though it's testing here. So I think we're buying up to this particular level. We can use another indicator. Let's use my MACD. So my MACD, you can see that it has crossed somewhere here. Around there that it crossed, is showing us that, okay, the moving average towards that is a buy. So we're looking towards buying up here. Okay, so that's for my MACD. Let's see. The other one that I use is the stochastic. On my stochastic, it looks like it's ready to drop because it's saying that people have overbought this thing. I don't know which people have overbought it, but because we are generally in a downtrend, you can respect it and just wait, because this is suggesting that it's a drop. The others are suggesting that it's a buy. You just want to wait for your level to be broken. When your level is broken, the MACD will change and you will see different. So for now, where you can either just blindly get in for a buy towards here and be watching it, or you wait for this trend line to be broken, this other trend line from this pivot high to this pivot high. You wait for it to be broken. When it's broken, you get a good momentum and you buy towards it. However, if this one is broken here, we're selling this bad boy all the way down. But I'm in a buy bias. I think even though the economy is recovering, it's still going to make this pullback. From this pullback, then we'll sell some more. We'll sell, then we'll get into this sell, this particular sell right here. So this is what I see for EURUSD, and I believe that we should be on a good side for the week. But I will update us though. I'll record this and post in the group as well so that everyone can have it. I hope you guys enjoyed today's session. We'll also put it on YouTube. Show me some love by liking, by sharing, by telling someone about it. And we'll catch each other next week, guys.
All right, thanks, bro. Appreciate it.
You're welcome, my brother.
Thank you.
You're welcome, bro.